Hello, everybody. This is Borbala Banto, CPA. This is Friday, March 8th, 2019. Welcome to our channel. If you know us and follow us, this is our weekly show where we answer your questions, anything business and tax related. Here, my brother is manning the technology, and I am reading the questions. So happy International Women's Day for everybody. It used to be a big thing in Europe when I was growing up. Here in the States, not that much. So if you got flowers or any type of gifts, chocolate, then consider yourself lucky. I have not yet, so I'm still waiting for going home and get all those things from my husband. Hopefully, I will get something. So how this is going is our clients and our friends send us questions. You might see the email on the bottom of the screen. It's borbala@conciergecpas.com. Anything that you can think of that we can answer that would be of interest of others. Obviously, we are going to read it without your name. Or also, you can put it in the comments right now, and we're going to make sure to answer them. We talk about everything, and most of the things just come up week after week, some basic things, but also some tax planning and some business and marketing related questions as well. Any housekeeping items? Right now we are doing these Facebook Lives on Friday afternoons at 6 p.m. Eastern. We might change it now in tax season. It was better for us to take some time off from preparing tax returns and our normal client work on Friday evenings. But as soon as tax season is over, we might change it to a different day when more people can follow us live. But also, all the other ones, all the 6 other weekly ones that we did, they are available on Facebook, and I think they're gonna live there forever. So feel free to, whenever you work out or you drive, to listen into those. So that being said, people were asking a little bit about ourselves, and some people thought that this is like a new business that we started. We've been in business for like 9 years now, and both my brother and I, we are CPAs. We have a full service kind of boutique CPA firm. We were called Not Your Father's CPA. Most of our clients are out of state, all around the U.S., although we are here in this little quaint, charming suburb of Cleveland, Ohio called Brecksville, surrounded by a lot of parks and hiking and the Cuyahoga River. So if you're ever here around Cleveland, please make sure that you come in and visit us. This is our boardroom. We do have a couple of offices across the hallway. We work with 5 staff, and we take care of a lot of just compliance type of stuff, tax returns and payroll and accounting. But also what we really like doing is the advising part, tax planning and advising. We're kind of the insurance companies, for if you have a car, if you have a house. We are there for our clients throughout the whole year. It's not just, we see clients tax time when they just drop their papers off, and then somebody who's paid $9 an hour will prepare them, and you can just come in and sign. We are not interested in those type of engagements. We really believe that if you do have, let's say you don't have a business, but you have some investments, you maybe have real estate, you're planning for your retirement. Even if you do not have a business, you need that professional advisor next to a good banker, a good insurance agent, a good lawyer that is on your Rolodex. Now, we come in when it's about financial, some questions or decisions have to be made regarding financials and taxes. If you do have a business, then especially we believe that even before you start a business, there are just so many things to consider. There are that really have a big impact on your future. Now, it is a fact, and it's a statistics that most small business people overpay their taxes, or even high net worth individual, they overpay their taxes. There are some very legal, tax strategy opportunities. They are not implemented in most, especially the small businesses' life. So we want our clients not to miss anything, but of course, we don't want any red flags or anything that would be dangerous. So every tax strategy that we implement has full backing and Actually, none of our clients have been, ever audited. So that's good, at least so far. So that's good. So we act kind of like business advisors, where our clients call us up before major decisions. We sit down with their lawyers, their financial agents, their bankers, insurance agents, a lot of times, and just come up with the best optimal solution for any expansion or any type of questions, or before a sale together. So those are the opportunities that really, like, we save. On average is that we save our clients twice as much, 200% of what our fees are. So if you're ever interested in checking us out, we do offer, for most people, I would say, especially if you're referred by somebody, complimentary consultations, where just basically a strategy session to come up with the best solution, show you or share with you best practices. That being said, let me read the first question. We have a good number of questions. There are similar, so I'm just gonna keep them short. And also, like, if you're interested on my take about anything that is business related or tax planning, legal entity relating questions, just put it in the comments. And welcome if you're watching us live. If you're one of our regular listeners, welcome. We are really honored that we hear there are people who are following us every week and they're watching us, so it's really humbling, and thank you. So the first question is, hi Borbala, my parents put money away for our kids, and my dad is asking me what the federal reporting threshold is for Ohio. They are in PA. Thanks. So this question or similar question came up a couple of times. Grandparents have some investments put aside for under the grandkids' name. Now, the first thing that actually I asked my friend here was that let's double check if that investment account that the grandparents have for the kids, supposedly for the kids, is that under the kids' social security number or the grandparents' social security number. So that's the first thing we have to determine. Now, it could be that the brokerage account is under the grandparents' name and they just do death benefit or POD as the grandkids, like a beneficiary, that if they pass away, the kids are their beneficiaries, but it's not under the kids' name today. So the first thing to determine, and you just have to ask them, please verify, and all the 1099s, they do have the last 4 digits of the social. So verify if it's the kids. So that's the one thing. So actually my friend reported back that yes, they are 3, she has 3 kids. The 1099s for these brokerage accounts are under the kids' socials. Now the second one, how much are the dividends, regular, ordinary, and qualified, and any capital gains, how much are they? The federal filing threshold is $1,050 for unearned income for a kid that is basically is used as a dependent, listed as a dependent on the parents' tax return. So my friend called up her dad while she was in my office, and the dad said, yeah, dividends plus capital gains shown on the 1099 it was like $1,099. So I said, yep, he does need a tax return. So actually this was just one of the kids. So all 3 of them turned out that they need a tax return. Now that being said, the tax might not be a lot, and also somebody might ask, why is there a 1099? They didn't take money out of the account. If the investments are in mutual funds and the mutual fund director, sells stocks, buys stocks throughout the year, capital gains and losses, are reported on the 1099s from those, and also all those stocks that are in the mutual funds or in the brokerage account itself, they have dividends even if they're reinvested. You get a 1099s. If this is just a regular brokerage account, you have to pay tax on it the year that they were incurred. So there might be, yes, a 1099, and you have to pay tax on the growth in this brokerage account, even if you never took money out. So a second client had something similar, so I said maybe we should talk about it, and parents should ask their parents, basically the grandparents, of what is that? Can we look at that? Or please look at those 1099s that you got under my kids' social security number, just to make sure that we are not behind with filing some tax returns. So that would be my suggestion. Second one, something similar. So there is this strategy that business owners who do have like a good business, where it's the type of business where they can hire the kids, and the kids reach that age that they can do something. So it's in a law firm, they can do some office work, some shredding. If they are like 12, 13, 14-year-old, a lot of times they can help out with marketing. Like I can't wait for my oldest to be, like at that age, couple of years from now, where like he can already do some, email marketing for me, where he can man constant contact. Here is, I read the email, like he can upload it and send it out to different people. Actually, I started using him to make and print out these labels that we use for the text binders. So he found it really boring, but he did it for a couple of days. So if all these kids, they can play on this really complicated electronic games and video games, like they could really like do some works in your office. And this is why I'm bringing this up, and it has to do something with taxes. So you can pay your kids, so you do have payroll, you have a business, you can pay your kids a reasonable wage for what they do throughout the year, and they should have a timesheet just like everybody else. The hourly rate should be totally reasonable for what they do. But they could really earn some money. So they can earn up to $12,000 now under the new laws without having to maybe even file taxes, or if they filed, it would be not, there would be no tax triggered. So technically, and every kid can earn $12,000, from other employers as well. But if you have a business, then especially. And what does that mean? If the kid helps out, but you don't pay them, the parent pays tax on, whatever that amount is under his or her tax rate, which could be 25%, 27%, whatever that is. Now, if the kid earns this and takes home the money, then basically that is 0%. So you just took $12,000 that was supposed to be taxable at 25% into the 0% bracket, right? So the kid, again, I said it has to have a timesheet, has to be reasonable wage. Now also, the money has to go into the kid's checking account. So just like running payroll for everybody else, run payroll for your kid and have him or her have a checking account and direct deposit there. Now, based on the current laws, you cannot use the money as a parent that they earn on something that you have to provide them anyways as your children, but anything extracurricular or anything above just like a normal keeping up the child, you can use it. And that includes summer camps, private education, extra clothes, like fancier clothes if they're into like brand name, and all kinds of things. Obviously video games, electronics, stuff like that. So that's one part of the strategy. The second part is basically, now the kid has earned income. The kid has a W-2. Why doesn't the kid put aside an IRA, can contribute to an IRA? And the best is, in his case or her case, is the Roth IRA. Because Roth IRA, you put money in it after taxes, which is your taxes percentage is 0, so after tax. And the kid is, let's say, 13-year-old. And the money just stays there till the kid is 59 and a half. Mind you, you are able to take it out without a huge penalty for a couple of exceptions, like really like medical expense hardship or first house, a couple of exceptions there are. But just imagine that all this like yearly $6,000 that you put in when the kid is, 59 and a half, even if there's the statistics that even if you put this Roth IRA, you invested in something that's really like the lowest risk, the kid should have like $500,000, $2 million. If you do this $6,000 for 10 years, like for example, 12 to 22, right? Until they finish college, they work for you. And they put aside $6,000 is the minimum. Oh, sorry, $6,000 is the maximum you can contribute into a Roth IRA. So a lot of our clients who have their kids work for them, they want to do that. So the second question is so we are adding him to the payroll, and we're going to transfer $6,000 to a Roth IRA. But his grandmother has some sort of investment account. We mentioned that. And does the IRA affect this investment account? So those are two separate things. Having an investment account by the grandma under the kid's name, and the kid having now a Roth IRA that he contributes every year, part of his earned income, his W-2. Those are separate things. But actually, it's a great strategy if you can afford it, right? It's such a great gift to your kids. Just kind of force them into contributing to a Roth IRA if they earn money, and just have it there, for 40 years. And it's something that they're gonna remember you by, like, when they're 60-year-old and then they have like, oh my goodness, that's $2 million just sitting in my Roth IRA from when I was a kid. And and I could have used the $6,000 a year on video games, but like my parents were wiser, and they put it away. So that's a great strategy. Now again, is it gonna change? Is it gonna yield tens of thousands of dollars of current tax savings? No, but the Roth IRA in 40 years will. Right? So basically put money in for 10 years, $6,000, $60,000. But when you take it out and it's $2 million, all that growth, you're never going to pay tax on it. And who knows what the tax rate is going to be in 40 years. So I think that's a great strategy. Everybody should do it. Next question. So here's the question. Where did I put the question? I know my answer. Okay, I'm getting ready. Here it is. I'm getting ready to send in all my stuff, like for tax prep. I just wanted to make sure I understand correctly. There is no need to include the amount I've spent on musician expenses the past year, right? Thanks. So the answer here is, and people are hearing all kinds of stuff, and there is a reason why this tax season is called once in a generation tax season. We have the new law, the Tax Cuts and Jobs Act of 2017. It started January 1st, 2018, but this is the first tax season when we actually implement it. And I tell everybody, we started taking webinars and classes on this new law as soon as it came out, basically 14 months ago. And there's still things that are coming out. There's still things that are like not worked out as far as how to implement them. I think last week I mentioned that we're waiting for some technical correction that the Congress has to get out. There's still crickets, so there's no word when it's coming out. So actually we are in a limbo and waiting to finish tax returns who could benefit greatly if this technical correction comes out regarding a 15-year leasehold improvement asset, or if it doesn't, then like some of my clients' loss is 2018 lost $100,000 less. So either it's zero or it's $100,000 loss because they just invested so much into this building. So there are a lot of things about this tax season, and one that people are hearing is, actually I heard people saying like, I hear horror stories, so I hope my tax return is gonna be better. Now there are some horror examples. A lot of people who are on W-2 now, they're not getting back any money, or they owe money. And this is the first time it happened to them. So obviously everybody's frustrated. Now, why would that be? What changed if their W-2s kind of stayed the same? What changed is when the new law came out, and the tax rates and brackets went down, the IRS came out with this new withholding tables. So employers started implementing these new withholding tables from paychecks starting February 1st last year. So employees started seeing a little higher net paychecks last February. So the intent of the law was, instead of getting a huge refund, why don't we give this to the masses during the year so they can start spending it during the year? So that's going to boost the economy. Now, the problem with it is, even if most people's paychecks increased $100 a paycheck, $80, $150, by this time, they forgot about it. It was really like a lot of people are waiting for a bigger refund to do something bigger. And then I have to tell them, I'm so sorry, even if your child tax credit increased from $1,000 to $2,000, and let's say you have 3 kids, so that would mean $3,000 more for you. Your withholdings, the tax taken out from your paychecks during last year was about $2,000-$3,000 less than what usually was the years before. So you're seeing the same refund as last year, or I had to tell a good number of clients that they owed. We have a client who works for Google and claimed single one on her paycheck, and you would think single one will result in, no itemized, nothing, no other income, will result in perfect tax withholding, a couple of dollars plus or minus. No, she owed $10,000. And luckily she heard from colleagues of hers that others were in the same situation, so she was not, that surprised. But I could see some of my clients would be like, what, $10,000 pay back? Like, no way. So they would just totally freak out. So, maybe those people who work for Google, they're really chill. So maybe that was, in the bag as well. So it's a very weird tax season. Tax preparation takes longer. There are a lot of things that we have to consider. They are new, and it's not taking longer because we don't know what we are doing. Or your tax prep person doesn't know. It just takes longer because there's more work with it, more things to consider, more schedules. Obviously, you might have heard that instead of 2 full pages of the 1040, now we have just 2 half pages. And then they created 6 new schedules, Schedule 1 to 6. So there's just a lot of things, a lot of weird things. So the answer to this question is, are the musician expenses still deductible? Now, the answer is, if you do have a W-2, so you are an employee of an orchestra, of an organization, right? And you had unreimbursed employee expenses until now that were claimed at what's called Form 2106, which was an itemized deduction. So maybe I mentioned this before. I used to do the most of the Cleveland Orchestra members' taxes. They are W-2 people. Some of them have Stradivari's, right? You have to bring your instrument to work. You have to buy that $500,000 instrument before you come to work. If I hire somebody, they show up with their hands in their pockets, right? So they don't have to bring their own computer or nothing, right? Just not even a pencil. So those people, for example, I had a client, a traveling salesman who literally drove 30,000+ miles a year for his job. And the company only reimbursed him for 10 cents a mile. And the IRS says it cost, in 18, 54.5 cents a mile. So all that difference was $20,000 that he claimed on his tax return as a deduction every year. So at least if he was not reimbursed, he did not have to pay tax on this amount. Now all that is gone, totally gone, went away. They took it out. So, for example, doctors, if they needed special glasses, if they had to pay for their own licenses, board exams, professional books, professional subscriptions, lab codes, and surgery, surgical glasses or stuff like that, they were able to deduct it, at least have it as pre-tax, but not anymore. So the best thing that can happen to you if you have a W-2 is if you ask for all kinds of expenses, there are like, in this category, ask for reimbursement from your employer and tell them, like, literally, I have these expenses. Instead of giving me $1,000 raise, just reimburse me, reimburse $1,000 because, it's better for me. At least, I get reimbursed versus if you give me $1,000 bonus, I have to pay tax on it. So there's no deductions for unreimbursed employee expenses. So that's one. But if you have 1099s, if you have a small business person, if you have, in the case of musicians, gigs, private, self-employed income, private teaching, or anything like that, then you have a Schedule C business tax return, right? And you list all your income, 1099 or not, you're responsible, to put it on the tax return and count it. And then you list all your expenses. So I told this particular musician, if you do have 1099s, you worked at festivals or you have private teachings, yes, put that on the tax return. And then, yes, all the musician expenses for the repair, supply of the instrument supplies, cleaning of the performance outfit, all kinds of things that, iTunes, CDs that they have to buy, those are still deductible. There is no such law that if you do have self-employed income, you cannot deduct, legitimate and necessary business expenses against it. So that's still very much in case. So that's what, my client said. I only have W-2s, but it's good to hear that the deductions are still allowed for gigging people. Yeah. Now, I was invited to speak in front of the Cleveland Freelancers Union winter meeting last week, and it was a really fun meeting. I got to meet so many fun people who are like employed, and they are like freelancers, all kinds of like consultants and video people. It was a great little meeting, and they do have in the winter a workshop about taxes, and this is the kind of stuff that they had questions on, like how do I organize my expenses, what are the best practices. It's hard enough to actually do the job, get the proposals out, the quotes out, collect the money, or work with other subcontractors. This is just like, it's really hard. So we do a lot of boot camps also. Boot camps, for people who want to learn about QuickBooks and setting it up together and connect the bank accounts and just teach them what can you use this for. We use Excel templates that we give out to people. That is basically like one column for each month and then a total. And then just rows, total income and all the expenses by category. And I always tell people it's so much easier if you fill this out after the month ends. For example, today is March 8th. If you would have done January, like early February, and now this week you would have done February, do you think it's a higher chance that you remember all these expenses and have the receipts, and just shove the receipts, after you counted for them, shove them in a shoebox, just write 2019 on it, but, write it down. So obviously, if you have QuickBooks or any type of accounting software, there are some free ones that people start out with as well, that use one business debit card and one credit card, just specifically, use it for the business. And then you do have two statements that have all the business transactions on them. Now, if you go to the bank and like every week and take out $300 from the ATM and use that $300 for your business, now you have a bigger chunk of work, because now you have to actually have the receipts, all the receipts, to substantiate that $300 cash that you took out every week. If you use your debit card or credit card, yes, you should keep the receipts in a box, but you do have the amounts and the vendors on the bank statement. So you just make sure that you have a PDF of your bank account and credit card PDF or monthly statements in a cloud directory, either Google Drive or Dropbox, not specifically on your laptop that can be fried or somebody can steal it. Actually just happened to a client of ours. He travels, he's in medical sales, and he said he just literally bought a $3,000 laptop, and he is not going in like dangerous areas. Actually, he's, I don't know, like 6.5 feet. I mean, tall, big guy. He left his bag on the front seat, a passenger seat, for 5 minutes, and they got into his car, before he came back from the restaurant, and just took the bag and everything. So he lost like a lot of things and data. So it's not safe to keep business data on an actual computer. It should be in the cloud somewhere. Obviously a secure place, but somewhere where you're not gonna lose it. Okay, this is an interesting question, and it might not be very prevalent for a lot of people, but I thought it was interesting, and I should share it if somebody is in this like similar situation. It says, "Hi Barbara, we are pursuing citizenship for my dad and would like to ask if you are able to help us with getting his pension deposit transferred from his Mexican account to his key bank account here that he uses to live on. He used to go visit Mexico quarterly and sign for the pension and bring cash back to live on. But he had a massive stroke in December and is no longer able to do this. His best friend was able to keep his pension from being suspended for failure to appear, so it is active, but he will need it sent here once citizenship is approved. Could you help? And if so, what is your fee?" So my answer to this question was yes, I was involved with a couple of similar situations from when people who were clients from Eastern Europe, they had pensions and they deposited into a checking account there. So after a while, they wanted to be wire transferred here to the U.S. every month directly. So what I had to tell my friend here is that you really have to initiate something like this on the overseas end. So in this case, in the Mexican end. So Mexican Pension Authority has to have a form that says, oh yeah, so if you're a citizen or a resident, actually even just a resident, there's nothing about his dad requesting citizenship that is prevalent here. So the only thing is that he's residing in a different country, not the country he's getting the pension from. He has to show it to the authorities there, and then they're gonna fill some paperwork out, give them the direct deposit info, and they're gonna wire transfer the money. Now, again, it depends. Most countries in Europe do it. I'm hoping that the Mexican government does it too. And of course, they take like, some instances I've seen $15 for wire transfer. But again, it's you don't have to appear in person. No other physical person gets it, and then has to send it to you through Western Union or something and lose money. So it's a great way. Now, once a year, most countries do send a pension office sends you a letter saying, can you please take this letter to a notary in this new country you live in now and sign in front of them that you're still alive and we are okay to send you the money still, and then send us back the letter. So most countries have that. I'm hoping Mexico doesn't need this quarterly. My friend here noted that his dad used to go back quarterly. I'm hoping it's not quarterly, but if it's in the mail, it's you can still do it. And you can find like a traveling notary who would go to this elderly person's house and he can just sign there, and then somebody would mail it back. So the only thing that basically I could say that we would be happy to look over this letter. Usually they ask for SWIFT code and all kinds of information of the US bank account that we don't really use it here, and it's not on your check, so you have to ask your bank about it, like how to fill it out, and they ask for like bank address and stuff like that. So if you ever are in a situation or somebody who could benefit of having his or her pension, foreign pension transferred here, direct deposited, you have to start on that side. So hopefully that helps. Next question. Hi, Borbala. I was wondering if you file tax returns for individuals as well. I'm contemplating switching my accountant this year, and you were one of the first to come to mind. Let me know. Thanks. So why I brought this up is because in my mind as a CPA, I'm thinking everybody knows the best way is to use a CPA is if you have your business and your personal at the same CPA, right? One person to know, one person to keep in touch with. If they do the business and let's say something happened in the business tax return is prepared late, they can put you on the wait list for the personal tax prep. They can coordinate it in one office. You don't have to show up late now at the personal CPA's office just to be told, oh, you have 50 people in front of you and now you have your place on the list. So I thought that's more as something that people know. Obviously my friend here is a highly educated person, is a very smart person, so I thought that all listeners can benefit from this. Just make sure that if you have somebody that you trust, they do more than just hopefully putting the right numbers in the right boxes. That would be great. So it's just less headache. Everybody has just so many things on our plates during the week. And I know my friend here who asked us has 4 little kids, so it's just easier to handle and schedule with one CPA. You can have your appointment and just talk about both the business and the personal, and you just get it done in one appointment versus 2 separate ones. Now, there are some instances where, let's say the CPA firm deals with so specific businesses and that's it, and they don't do personal, but you need that specific knowledge for your business tax return. I could see. Usually that's not the case, right? But I could see where there are some exceptions. Now, it was just actually a couple of months ago when maybe I mentioned this. We are taking this focus. What is it called? Finding Your Focus workshop at a local business advising association called Jumpstart. And I don't know if I heard it there or from somebody else that even knowing people takes time. Like literally. And actually this hit me really because sometimes I'm thinking we just help so many people, and even if they are not our best clients, like best meaning specifically the niche we want, but they really need help and they like there's nobody who can help them. Obviously that's what I believe. There's nobody who can help them as well as we do, and I'm only gonna see them twice a year maybe because they know like maybe they cannot even afford to use the services that they really need to, but let's just help them. And then later I realize it just takes time even just to know somebody, to think about their birthdays, schedule their appointments, handle their files, even if just very minimal scope that we work with them. So it's not even fair to them either if I cannot give my full attention to them. So yeah, just use the same CPA if you can. So this particular client is a good friend of mine also. Like everybody's a good friend here. I might just say just like too much that, my friend, but literally in this office, I literally met everybody when they became clients, and I see them or talk to them frequently. Now we do have clients where we have not seen each other in person ever, like we never met in person, but we work together for the last like 7 years. And so there are those, but at some conferences or when we travel, we try to visit clients. So at some point, I think, especially the local clients, like we just see them a lot. If nothing else than through the video chat on GoToMeeting, but we really feel like we are friends because it's just the nature of the business that we see everything. When somebody's like, we have the good number of clients who are getting married, they're buying their new home, and then they have babies. So all these life events that they need the CPA. They have questions for the CPA. So we go to funerals, we go to 50th birthday parties for our clients, some weddings. It's really, we are part of the community. Now, I was at one of my clients' 89th birthday 2 weeks ago, and there was just a small group of about 25 people. So I was standing next to my client and congratulating her, and people started asking me, like who are you? You know, we don't know you. And it's just like, I'm her CPA. I'm a CPA. So it was just so fun. It's like, why is a CPA here? So like, I don't know. I visit her every Sunday. So we just became friends. So that's kind of the place where you have that open communication channel that you would like. When we see new people, potential clients, the first thing that I asked is, why do you want to change CPAs? And a lot of times, more times than not, the answer is, I can never talk to them. Either they don't respond, or they respond in 3 weeks, or they send me a bill for $100 after they respond. So then I just stop calling because I don't want to see a bill every time. And my phone is ringing. And that's just so sad. That's just so sad. You really want like a good friend. I mean, you don't necessarily have to be friend and invite me to everything. That's what I was saying. But we really, what we call is financial therapy. And people who've been in my office, they know we have a velvet couch with Kleenex next to it. And this is no joke. Like, people are crying. And most of our clients are like high net worth individuals or highly educated professionals. They have their own law firm, they're doctors, or they are business owners with dozens of employees. But when we talk about life events, it's just really emotional. If the business is not going well, it's emotional. And most of the time, and I know from myself, we just need to have this facade in front of employees maybe, or in front of our families sometimes, that everything is good, but it's just bottles up. So there are a lot of times when the bottle just opens. And I had a client telling me 2 years ago, she has an appointment, and she said, like, literally on my way here, I just found out I have cancer. And she was just crying and crying, and I was just sitting next to her and hugging her. Obviously, we didn't talk about anything tax related, but that's the relationship that you deserve. Like, you really deserve to be able to call somebody from the dealership and say, Barbara, there's a good deal for me to lease this car. There's a good deal for me to get a loan and buy this car. Which one is the best scenario, right? Or I'm moving, and I literally had these questions like, I have 3 offers to move to 3 different states. Can you just compile a little report of what type of property tax rates and income tax rates, or maybe local taxes, I'm going to be looking at if I choose each of them? And yes, that should not be like the deciding factor, but it was a factor, right? So that's kind of a relationship that you deserve. And if you have, that's how you are served best, right? So if you are somebody who, and most small business clients, they really think that they serve their clients to the highest possible standards, right? Like, if somebody opens a diner, they are not opening the diner or a food truck with the intention of making crappy food, right? Like, they really think, I can do this better than the person I used to work for, and that's why I'm going to start, my gig. So if that's how you treat your clients, and most of us, hopefully, that's how we treat our families. I just want the best for you because you deserve it, especially with our kids. That is the CPA and the professional advisory board that should surround you look like as well. So you deserve to have that attorney on your Rolodex, on your phone, that banker that if like, oh my goodness, I have this opportunity, but I need a line of credit. You should have that banker in your phone that you call up, even if you just nurtured relationship, even if you never needed them before, that you can get that. And the same thing from the CPA, like you have all those documents, financials, everything, so you can just jump on an opportunity. That's how you get ahead. So this is the last question is, and this is only, I'm bringing this up because the deadline for filing for S Corp election is next Friday, a week from today. So if your CPA ever talked to you about the S Corp strategy to save money, then and you have not acted on it, maybe this is the time when you should just look at it again. And if it's the best choice for you, you still have a week to file an S Corp election that starts back on January 1st, 2019. Now, people hear this S Corp, left and right. I tell small business owners, when you have about 50K profit, 50K, then you should really be serious about knowing more about it. So I'm not going to go into how you can save money and what is actually the strategy. Just know that if you are a Schedule C taxpayer, so you have a small business, you're a single member LLC, 99% is that, and you have not elected any other taxation, you pay tax as a Schedule C. That's just one page on the, at the end of your personal tax return. Now, that works for a while. That's how most people start out. But it's not the best way for multiple reasons. One is your audit rates, audit chances. If you have a Schedule C, especially if your income is more than, gross revenue is more than $100,000 on your Schedule C, your chances of getting audited are 4%. 4%. If you are taxed differently, I'm not talking about changing the legal entity. You're still as an LLC. You don't change anything with the Secretary of State. But if you're taxed differently, like an S Corp or a C Corp, or if you get a partner in the LLC, now there are two members, so you do have to file a partnership tax return, your chances of getting audited go down to 0.4%, which is 100 times difference, right? So that's one. Maybe you say whatever, that's audit risk is really not something that I'm worried about. Then the higher the profits that you have, you should just know that the Schedule C is the highest tax. It has tax for Social Security, Medicare, income tax, everything. So especially under the new tax law, when the corporate tax rates went down from 35% to 21%, you should really have a tax plan. A tax plan is basically just a 50 to 100 page document, that's at least in our office, that tells you all kinds of strategies that are potentially good for your business and your life right now and maybe the next couple of years. So, and then this is how we implement them. So you should really ask your CPA. You see them, your tax prep guides anyways. Do you do tax planning? Is this something that you do? Can I come in after tax season and have a official tax plan when you, again, and the value is not in the paper. The value is in you sitting down with the CPA, the tax planner, and the tax planner showing you exactly what it takes to implement these strategies, exactly with numbers on your situation, current year, last year. How much extra did you pay that was not necessarily because you did not implement these strategies, and how much net dollars, you would save if you implement them. And then you can make a choice is it worth for me for that much money or not? And maybe I mentioned this, I presented this tax planning opportunity to a client of mine, a good friend, and the net savings would have been about $5,000 this year. And she really just told me, Borbala, I'm single, I don't have any dependents. I have to tell you what comes with it, even if you take care of it, but you still have to tend to it and just know about it. It's not worth for me for $5,000. And I respected that. It's there are people who for a net $5,000 and an extra 2 meetings a year with me, which again, for the fees of everything, they're already included. So your net savings would be $5,000. There are families who would say I can go on extra vacation for $5,000 and might have that opportunity to be with my kids and make memories for $5,000 a year. But for her, it was not worth it. So it's an individual decision, but you should at least know what do you say no to. You shouldn't just like hear about it's like, oh, I from somebody, let's say I elected S Corp or C Corp and this is how much I saved, and have you heard about it? And you have to say no, because my CPA never told me about it. That's like the worst scenario. If you know what you say no to, it's fine. You intelligently you can talk about it, or to yourself, like, I know this is why I'm not doing stuff, or I know why I'm doing stuff. So do yourself a favor, have a tax plan engagement with a good CPA. We do offer these mostly after tax season, but year-round. If you're interested, call us or shoot us an email. It's really very painful. As painful, as painless as we can. So it's really not painful at all. So we do all the work, and you just have to listen to all the suggestions, and then you just have to ask us questions, and then you have to say, yeah, I want to do it, or no, sorry, I don't want to do it at this time. So it is as painless as it can be. Although I tell this kind of, it's like a joke that I tell people. I was at a networking meeting once, and for attorneys, and there was this older attorney lady came in later after everybody introduced themselves, so she did not hear like who I am. She sat next to me, and after a few minutes she said, so what do you do? I said, actually, I'm CPA for attorneys mostly. And she just literally jumped like this and said, oh my goodness, that's the only time I feel stupid, when I see my CPA. I started laughing. I said, I'm so sorry. That should not be that way, but I appreciate that, the feedback that's how people feel a lot of times. So again, do yourself a favor, find somebody like a CPA who is really not threatening, non-judgmental, because everybody has their own issues, right? We do, everybody has. And really just, you can talk openly with them about stuff and not just hear like one word answers for a couple of questions, because then you're not gonna answer the rest. So somebody who's approachable, they're all year round, and their fees for tax prep, I believe that's the best practice, and that's what we use in my firm, just covers the whole yearly relationship. So our clients never have an extra bill. They can call us anytime, they can have meetings with us, email, phone, in-person meeting, and that's just all covered because it's part of the package, and it's still manageable and affordable. So do yourself a favor, find somebody like that, and just know, a lot of people, I tell a lot of people, this is kind of getting an MBA in financial coaching. And on that note, we do have a course, like right now we're doing it privately, like a financial coaching, like 6-week, we call it course. People don't like to hear course. Just basically an opportunity to learn more about personal and business financial matters, and how you should, like, what's the best way to deal with them, and learn a lot. But just by working with us, because we do go through the tax return if somebody's interested only, but we do tell you, this is why you get this refund, or this is why you pay this much, and this is how we came up with it, and where we saved you all this money. Our clients learn so much by osmosis, right? Just by learning and hearing, that after a while it's like, oh my goodness, I really know a lot about these things. It's kind of like getting an MBA in the financial management of your own household or your whole business. So this client was just asking what she needs to give me for the S Corp election that we are preparing for her signature. And basically what you need is your LLC's information, like a local charter number, when was it formed, who are the owners, what is the owner's name, address, what is the owner's social, because they need to sign, and what is obviously the company, when did it start. So just very basic information. And there are just 2 forms that need to be filled out, signed, and mailed by March 15th. There is such thing called late election. Lately, the IRS really doesn't like it. So again, if you have at least $50,000, or you think this year you're gonna get to $50,000 profit, do yourself a favor, reach out to your CPA. If you don't have a CPA or somebody that you like, just reach out to us. And the question is, should you file S election before next Friday, March 15th, or not? So with that, thank you very much for being with us. I know a lot of this is not like soap opera that's just so easy to digest, and but yeah, these are just like normal things if you just hear them all over and over. And the biggest thing is, if you're our clients, you don't have to think about these, because we take care of you and we bring it to your attention, all the new stuff and new opportunities. But it's still good to know, right? It's still good to know to think about these things. And this is why. The why is not just because you are now more intelligent. The why is that, as somebody told me, the lottery is the tax on the poor, because most poor population buys the lottery, and usually they don't pay tax, but this way they give the money to whatever, the state lottery or whoever has the lottery. I really think that not having a good advisor, a good CPA, and overpaying your taxes is the tax on people who are really not proactive. And again, I think it's like in the billions of how much people pay more tax. If you believe that government is using it for, good things, you can always send them extra money too. They do. There is a line. There's a place where you can send extra money to the treasury. Like literally there is. But if you think you can spend it better on your kids, right? On your family, on the charity of your choice, then why not? I mean, literally, why not? Every tax planning engagement, the charge for it is this much, the tax planning charge, and then the savings is at least 3 times as much. So you can just use that extra money for, memories, your house, live in a better neighborhood, drive a better car, versus giving it to the IRS for not being ignorant. So that's what it is. Now, I understand when people start out and they have earned income credit, most of our clients, no, I would say 99% of our clients do not, because they are either high earner or really go-getters and they have their own business. This is when you start earning a good chunk, it starts to hurt. It starts to hurt because the taxes are $20,000, $30,000, $40,000, $50,000 a year. We have clients where $150,000 income tax a year. And if you can just save 10% of that, which is $15K, just imagine that would change a lot of things in your life. That you could just do stuff that you cannot right now. Again, if you don't need the money, at least to give it to some charity, your church, that you think that your community could be better off, just by being proactive and not even earning $1 more. So that's why it really hurts me when people are like, yeah, I don't care, I'm just gonna pay it. You being proactive can help a lot of people, kind of like a ripple effect. A lot of people in your community. Maybe you can, and I heard this example, I heard this example a long time ago. Maybe you have a little more money in your pocket and you hire somebody, as a household helper to clean your house. Now or mow your lawn. So now that lady or that person who mows your lawn now has higher income, so they can buy maybe like an extra bicycle for their kids that they couldn't. So all this ripple effect. So maybe they spend it at a local store. So now the local store is better off. So it has, even just you being proactive, it could have this ripple effect in your community, over and over again. So do yourself a favor, be proactive, because that's how you get premium results. With that, thank you very much for being with us. Next Friday, we're planning to be back at 6:00, and if we change the dates, we're going to post it. Have your taxes done sooner rather than later. Hopefully you're not going to have any bad surprises, just good surprises. Take care. Bye-bye.